Good morning viewers. On this Monday, 24th of November 2014, herein I give a wrap-up of the commodities complex on an intraday basis, on a weekly basis. The first thing that needs to be pointed out that US markets are likely to be curtailed this week, Thursday being a holiday for Thanksgiving, and Friday the volumes are expected to be less, although the markets would be open, but generally it's considered a long weekend, and hence traders are advised to trade cautiously, close all positions by Wednesday. All data during this week are also expected from the US before Wednesday. Watch out for evening trades from today, beginning with the consumer confidence and the new home sales data that are likely to come out over the next 3 days. The US dollar index also needs to be watched. It's at a fresh high, sitting at 88.3 after a major fillip was given by the positive data that came out from the US markets whole of last week. This buoyed sentiments in the US market as reflected by the Dow Jones and the S&P index that has hit new highs, expected to continue the trend. Overall, although the dollar index is now stated at around 88.3, some profit booking could come in before the year end as the long traders unwind their positions, and any dip in the US dollar index could see further movements in the commodities on the higher side. Pertinent to point out is also on 27th of November is the OPEC meet that's likely to come up and decide on the inventory drawdown or upcharge in the crude oil inventory. No major moves are expected during this meet as is expected by the market. In any case, if any surprise decision comes out from OPEC, it will have a sharp inclination or decline as far as prices are concerned. So have a close watch on 27th of November, late evening, when the decision is likely to be announced. The markets were buoyed on Friday in the second half of the session after Bank of China cut the interest rates by 0.40% to 5.6%. This is the first time since 2012 that Bank of China has cut the interest rates. More steps are also likely to be taken, as was commented upon by the minister concerned, if necessary, and to boost up the economy. This buoyed up the sentiment overall and saw a sharp rally in all commodities across the board, right from bullions to energy and base metals, and continuing right through the early session in early trades this morning, as is reflected by all trades which are now sitting at fresh 10-day highs. ECB, meanwhile, as you all know, as during the past week also announced stimulus measures. Euro is at a 28-month low, and further steps could also be taken by Bank of England and the ECB to boost the economy if needed. Pertinent to also watch out for is a Swiss gold referendum towards the end of this month, although the opinion polls are now suggesting that it could be rejected, in which case it could not have a major impact in the movement of gold. Now we talk about the Indian macroeconomics. INR is now trading at around the 61.7 rupee to a dollar mark. Resistance is now at 61.5 and support is at 62.25. The trading range is 61.5 and 62.25. A breakout on either side could decide the next move. RBI credit policy comes up on December 2nd next week, which could have an impact also in the movement of the INR, and hence could impact the rates of the MCX commodities during the course of next week. Winter session of Parliament begins today. It's a 22-day session and 67 bills are expected to be introduced. Major bills that needs to be watched out by the economists are the GST and the insurance bills. Nifty is now trading at around the 8500 mark. Watch out for consolidations also, although the volumes are now dropping a little bit. Any break below 8500 could see supports at around 8450. Positional support is now at 8350. Any break below that only can be construed as a further correction in the markets. Resistances are now at 8550 to 8610. Now I talk about the individual commodities. Gold is now trading at around the 1200 mark. Hit a high in early trades today of 1204 and on Friday night of 1207. Resistance on the Fibonacci chart is now at 1208, and so that level needs to be broken for the next up move up to $1224. On the downside, the support is at $1190. The trading range is now taken as 1190 to 1208. A break about 1208 could bring in more positiveness on the international market, still around the $1224 mark. On the MCX, it's now trading at around the 26,475. Resistance is at 26,600, which is the approximate level for the $1,208 mark. A break above 26,600 could take it to 26,800, where sharp resistances are expected to be met. On the downside, the supports are at 26,300 and 26,100. A weekly close only below 26,000 could define further weakness on a positional basis in gold. Till that time, it is expected to remain in a range-bound movement. Silver is now trading at around the $16.4 mark, resistance at 16.5. A break above 16.5 could test levels of 16.75 to 16.8. Support is now at 16 to $16.10. Overall positional resistance is at around the 17.1 and the support is at 16. A breakout either side on a weekly close could have sharp moves on either side. On the MCX, now trading at around the 36,100. Immediate support is at 36,000. Weekly support is at 35,750 to 35,700. Resistance is now seen at 36,650. Further moves above 36,650 could see levels of 36,850 and 37,000. Wait for entries in both gold and silver, as also keep a track on the INR moves during the course of the week for further trades. Copper is now trading at around the 414 mark. Saw a sharp rally up to around the 418 mark on Friday evening as soon as Bank of China decision came out. Again, the trading range could be seen in a narrow range of 411 to 417. Support is now at 411 to 410 and below that at 407. On the upside, resistance is at 417 to 418. Only a break above can confirm that the market is on a positive side till around the 420 to 421 mark, which is a crucial resistance level above which can be confirmed that the rally could take it up to 430 in the days and weeks to come. On the other hand, a close below 407 could see levels of 405 and 403 be tested. Overall, for intraday trades, copper levels to be watched out are 411, 410 on the downside and 418 on the upside. So long as these two levels are not breached, it's very difficult to get an entry and an exit level or trade on an intraday basis in copper. In any case, if any opportunity comes, the same will be posted in our website and blogs. Nickel is now trading at around the 1018 to 1020 mark. Overall, it remains positive. The immediate support is at 1010. A break below could see a drop of another 10 to 12 rupees. Positional support is now at 996. On the other hand, a break and sustain above 1028 could see next levels of around 1035. So wait for fresh entries in natural gas for the time being and visit our website for any updates on the same. Crude is now trading at around the 4760 mark. Immediate support and resistances are at 4700 and 4800. A break below 4670 will confirm further weakness. So long as that is not broken, we expect levels of 4800 to 4820 to be tested. Again, keep a watch on the INR for moves of crude oil. Natural gas has opened gap down as was expected in our morning update, which has been posted in our website and blog. Today is a contract expiry for November. Trades at around 250 now. Immediate support is around the 247 to 248 and we expect support to be taken at current levels at around the 250 levels for levels to be tested on the upper side of 252, 255 and 258. So buy on dips is still advised, although technically the markets are adjusting since today is a contract expiry for November. December trades at around the 262.5 mark. Supports are now at 257 to 255 and resistances at 268 and 270. Still buy on dips are advised, although fundamentally we need to watch out for the weather conditions in the US, which changes or alters the dynamics of demand and supply. Overall, zinc, lead and alu remain positive. Aluminium is now trading at around the 127.30 mark, positive above 126.50. Now we could look for levels to be tested on the higher side of 128 to 128.5 and support at 126. Next weakness could be seen only on a break below 126. Zinc and lead remain positive. On an intraday basis, lead can be bought into on dips at around the 126.40 mark, now trading at around the 126.75 with immediate support below 125.50 for targets of 127.90 and 128.80. On a positional basis, only a break below 125 can be taken as further weakness, and on the upper side, a close above 128 half could open up close for the next level of 130. Zinc again remains positive, now trading at above the 141 mark, now precisely at 141.30. Buy or dips is advised at around the 141 with stop loss below 140 for targets of 142.50 and 143.50. Weekly close above 142.50 could see levels of 144 and 145 in the days to come. Overall, we would advise you to follow our intraday trades which are posted on our website and blogs. And please visit our website at www.akshayashift.com, as also our postings on our Twitter and Facebook. Have a safe and profitable trading day. Thank you.